All right. Hey, everyone, get ready because today we are going deep on mortgage rates. You
Yeah,
know, the thing that can either make your home buying dreams come true or totally crush them. It
absolutely.
often feels like just when you think you understand mortgage rates, they just change like crazy.
Right.
You sent in this blog post by Realtor John Crowder,
Yeah.
and honestly, his take on mortgage rates is really interesting. So
Mm.
we are going to break it all down today. So by the end of this deep dive,
Yeah.
you will feel like you can actually understand how these things
Yeah,
work.
well, I think a lot of people miss is that there's this like widespread belief that the Federal Reserve just sets mortgage rates and that's it.
Right.
But Crowder's post points out it's way more complicated than that.
Yeah, I have to admit, I used to think the Fed just had this like magic lever they would pull to control rates.
Hmm.
And it made me feel like things were just really unpredictable.
Yeah.
Crowder's post really made me realize there's all these other forces at play.
Right. The Fed rate is really about short-term loans between banks. Mortgages are completely different. They're long-term, and their rates are affected by a lot of factors, starting with, as you probably guessed, the bond market.
Okay, the bond market.
Yeah.
It always sounds a little intimidating.
It can be, but try thinking of it like this.
Okay,
Imagine you're at a horse race.
okay.
You can bet on the favorite to win, which is safer, but you won't win as much money. Or you could bet on the long shot,
Okay.
which is riskier, but if that horse wins, you could get a much bigger payout.
So short-term bonds are like the favorite to win,
Yeah,
and long-term bonds are the risky long shots.
exactly. And that 10-year treasury bond is the long shot at the racetrack.
Okay.
It's really important when setting mortgage rates because mortgage-backed securities, those bundles of mortgages that lenders sell to investors,
Right.
have to compete with these bonds.
Hmm.
If that 10-year treasury yield goes up, meaning that investors are getting a better return on that risky long shot bet,
Right.
mortgage rates then have to increase to stay competitive.
Oh, so it's like this ongoing race between these different investments,
Right.
and mortgage rates have to try and keep up.
Yeah, that's a good way to put it.
Okay.
And this is where it gets really interesting because sometimes you see the Fed cut rates,
Hmm.
which seems like good news if you're trying to borrow money,
Right.
but then mortgage rates actually go up.
Yeah, I know.
It's kind of confusing, right?
Yeah, Crowder mentioned that in his post too.
Yeah.
It seems totally backwards.
Yeah.
You would think lower Fed rates would mean lower mortgage rates.
Well, you would think that, but you have to remember that when the Fed cuts rates, they are usually trying to boost the economy.
Okay.
And sometimes a really good economy can lead to inflation.
Ah, inflation.
Yeah.
You know, it's like that thing that slowly eats away at your budget.
Exactly. And investors, those people at the racetrack, are always trying to be smart.
Hmm.
When they sense that inflation might be coming, they know that the value of their returns is going to go down. So they ask for higher yields on those long shot bonds to make up for it.
And then since mortgage rates have to try and keep up with that, they get pulled up higher too.
Right.
Wow, it really is kind of like this chain reaction.
Yeah.
I mean, isn't it a little bit of a gamble for those investors to bet on inflation that might not even end up happening?
It is a gamble, but remember, they are watching all these different things happening in the economy,
Hmm.
not just what the Fed is doing. And lenders also think about expected inflation when they set mortgage rates.
Okay.
So they aren't just reacting to what's happening right now.
Okay.
They are also trying to guess what's going to happen in the future.
So even if inflation isn't that high right now,
Okay.
if those investors think it's going to be an issue later on, mortgage rates could still end up increasing.
Exactly. It's kind of like if you're baking a cake, you have to adjust how much of each ingredient you use based on how hot your oven is, right?
Right.
Well, lenders are always adjusting those ingredients in their mortgage rates based on how hot the economy is. And inflation is one of the things that makes that oven hotter.
Okay, so we've got the Fed, we've got the bond market, and we've got inflation.
Right.
All of those things seem to be affecting these mortgage rates.
Right.
Is there anything else that we need to consider?
Absolutely. There's one more layer we should look at, and that is treasury spreads.
Okay, spreads. I'm feeling like there's a lot of financial terms being thrown around.
I know, but this one isn't too complicated, I promise.
Okay.
Basically, a spread is just what we call the difference in yields between different types of treasury bonds.
Okay.
By looking at these spreads, we can get a better idea of what's going on in the economy and how that might impact mortgage rates.
Okay, I'm listening. What kind of spreads should we be keeping track of?
There are two main ones. The first is the spread between the 10-year treasury yield and the 2-year treasury yield.
Okay.
Remember that racetrack we talked about?
Yes.
This spread is like comparing what the favorite horse is going to pay out versus what the long shot will pay out.
So if the spread is big, it means that the long shot, the 10-year bond,
Right.
is paying out a lot more than the favorite.
Right. Exactly.
Okay.
And that shows us that investors are expecting higher returns down the line.
Okay.
Maybe because they're worried about inflation or that the economy is going to slow down.
Right.
But sometimes, this is really interesting, this spread actually inverts.
Inverts.
Yeah, meaning the 2-year yield is actually higher than the 10-year yield.
Whoa. So it's like the favorite is paying out more than the long shot.
Yeah,
That just doesn't seem right.
it doesn't. And a lot of times, this means that investors are worried that a recession might be coming.
Oh?
It's
Yeah.
kind of like that canary in a coal mine warning.
Okay, so we need to be watching that spread
Right,
to see which way it's moving.
exactly.
Okay, what about that second spread you mentioned?
The second one is the spread between the 10-year Treasury yield and the actual mortgage rate.
Hmm.
This spread is all about risk. Mortgages are riskier than government bonds because people could default on their loans, right?
Right, yeah.
To make up for that risk, lenders set mortgage rates a little bit higher than the 10-year Treasury yield.
Right.
But how much higher that is, the spread, can change a lot depending on how risky lenders think things are.
So if lenders are feeling a little nervous about things like inflation or the economy,
Hmm.
they'll make that spread bigger to protect themselves.
Right.
And that makes mortgages more expensive.
Exactly. So by watching that spread, you can get a better sense of how lenders are feeling about things and how that's going to affect mortgage rates.
Okay, so we have a lot to think about here. The Fed, the bond market, inflation, and now these spreads.
Yeah.
It's starting to feel like I can actually see how mortgage rates work.
Good.
But I'm really curious about how all of this plays out in real life.
Yeah.
What does the current mortgage situation look like based on what Crowder was talking about in his post?
Well, let's look at what he said.
Hey, tell me all about it.
Kreider said that as of November 13th of this year, the Fed has actually cut rates 2 times recently,
Okay.
once in September and again this month. So you would think that would be good for borrowers.
You would think so, but I'm guessing it's not quite that simple.
Remember, we have to look at the big picture here.
Right.
Unfortunately, inflation hasn't really been cooperating.
Uh-oh.
Both the overall consumer price index and the core CPI, which doesn't include things like food and energy prices, have actually been going up.
So even though the Fed is trying to help the economy by cutting those rates,
Right.
inflation is still something to be worried about.
Exactly. What about those treasury yields we talked about?
Crowder said those have been kind of up and down.
Right.
They jumped up after the Fed cut rates because people were worried about inflation,
Mm-hmm.
but then they calmed down a little as investors tried to figure out what was going on.
Yeah, so a lot of uncertainty going on in the bond market right now, which, as we talked about, directly impacts mortgage rates.
Right. So what does this all mean for anyone out there who's thinking about buying a house or refinancing right now?
Well, Crowder says that even with those Fed rate cuts, mortgage rates are staying pretty high, around 6.92% for a 30-year fixed mortgage as of early November.
So the Fed cuts rates, but mortgage rates stay high.
Yeah.
That really shows you that it's not as simple as we might think.
Right.
We need to understand all of these other things we've been talking about.
Yeah, it's not just about what the Fed does.
Right.
It's about how the bond market reacts, what's happening with inflation, and how all of that makes lenders feel about the risk involved.
Okay, I think we've laid a good foundation here.
Yeah.
We have a better understanding of what affects mortgage rates.
Right.
But what I'm wondering is how can we actually use this information to our advantage?
That's a great question.
Like, how can we be smarter when we're borrowing money and maybe even make things work out better for us?
Right, that's what we're going to be talking about in the next part of this deep dive. We'll be looking at some real strategies that you can use to navigate this complex world
Right.
and hopefully even tilt things in your favor a little bit.
Sounds good to me. I'm ready to hear about it.
Yeah.
Okay, so we've unpacked all those forces behind mortgage rates, the Fed, the bond market, inflation, and treasury spreads. It feels like we've been getting a sneak peek behind the scenes of how these things actually work.
Exactly. And now that we've broken down how those mechanics work,
Yeah.
let's talk about how you can use this knowledge to your advantage.
Yes, let's get into the strategy here.
Okay.
Crowder ends his post with this question that I thought was really interesting.
Yeah.
He says, knowing that all of these different factors affect mortgage rates,
Right?
how can you actually use that knowledge to help you when you're trying to buy a home? So how would we answer that?
I think the biggest change is moving away from thinking about mortgage rates as this like fixed number.
Right.
They change all the time, and all those things we talked about have an impact on them. That means it's something you can plan for,
Okay.
strategize around, and you can even try to influence it a little bit.
I like that. It's like you're taking control instead of just feeling helpless.
Exactly.
Okay, so how do we do that?
Well, like they say, knowledge is power, right?
Right.
You wouldn't buy a car without doing some research.
Yeah.
You shouldn't just jump into a mortgage without really understanding what's happening with those rates.
Okay, so where do we go to find this information?
Yeah.
Should I just be on those mortgage websites all day, every day, constantly hitting refresh?
Well, those can be a good place to start to get a general overview,
Okay.
but you have to remember that those are usually just averages.
Right.
The actual rate that you will get will depend on your situation
Okay.
and which lender you choose.
Okay.
To really understand what's going on, you have to go a little deeper.
Okay. Tell me, where should we be looking?
One great resource is the Federal Reserve's website.
Okay.
They have this whole section dedicated to teaching people about mortgages. There are articles, videos, they even have these tools that you can use that help explain different types of loans, how interest rates work, what to think about when you're choosing a mortgage. It's a really great resource that comes straight from the source.
Okay, so the Federal Reserve website.
Right.
What else?
You know those financial news sources that you always hear about?
Yeah.
Don't underestimate those, things like the Wall Street Journal,
Yep.
Bloomberg, or even just well-researched blogs and podcasts that talk about economics. Those can really help you get a better grasp on what's happening in the market.
That makes sense.
Yeah.
So we're reading up, we're trying to stay informed.
Right.
What's our next move in our mortgage plan?
Okay, so don't be afraid to talk to the experts.
Okay.
Loan officers, mortgage brokers,
Right, sure.
they are working with these rates every single day.
Right.
So they really have their finger on the pulse of what's happening.
It's like having someone who can guide you through the wilderness. Right. Someone who knows all the little paths and can get you where you need to go.
Right. And just like we talked about with realtors, don't be afraid to ask those tough questions.
Yeah.
How do they see rates changing?
Yeah.
What factors are they looking at?
I think sometimes people are afraid of sounding like they don't know what they're talking about, especially me. But it's our money, it's our future, so we need to understand.
You're exactly right. Any good professional should welcome those questions.
Yeah.
It shows that you care and you are serious about making the best decision for yourself.
Okay, so we are learning everything we can.
Right.
We're talking to the experts.
Yeah.
What's next?
Well, timing can actually be a really powerful tool.
Okay.
If rates are super high, but you think they might come down,
Yeah.
waiting could actually be a good strategy.
Okay.
Of course, it's a bit of a gamble.
Right.
No one can predict the future perfectly.
Of course not.
But that's where understanding how all of these economic factors work can really help you.
So we have to think about the risks and the potential rewards.
Exactly. But even if you decide that now is the right time to go ahead,
Yeah.
there are still things you can do to try and get a better rate.
Oh, okay. Tell me the secrets.
One thing that a lot of people don't think about is shopping around.
Okay.
Don't just talk to one lender and go with them.
Okay.
Get quotes from several different lenders.
Mm-hmm.
Compare their rates and fees
Yeah.
and what their terms are.
Oh.
You might be surprised at what you find.
It's like anything, right?
Right.
You should always compare before you buy.
Exactly.
Okay.
And this is where having good credit
Yeah.
and being in a good financial situation can really pay off.
Okay.
Lenders see you as less of a risk, and they're more likely to give you a better rate.
So all those years of making sure I pay my bills on time
Right.
are going to finally help me out.
They really can. Having good credit can save you thousands of dollars over the life of your loan. And before you actually apply for a mortgage, make sure to check your credit report.
Yeah.
If there are any mistakes on it, make sure to get those fixed.
Mm.
Because even little errors can bring your score down.
Okay, so credit report, check. Anything else I can do to make sure my credit score is helping me as much as possible?
Try to avoid doing things like opening new credit cards or making big purchases
Okay.
right before you apply for a mortgage, because that can lower your score for a little bit.
Okay, so just be extra careful with my money right before I apply.
Right. Basically, show the lenders that you are responsible and they will be more likely to give you better terms.
Gotcha.
And here's another tip.
Okay.
Don't be afraid to negotiate.
Yeah.
Ask the lenders if they can match or beat an offer that you got from someone else.
Okay.
You'd be surprised how often they are actually willing to work with you on that.
I never thought about negotiating a mortgage rate, but it makes sense.
It does, especially if it's a competitive market.
Okay, so we're checking our credit score, we're shopping around
Right.
and we're negotiating
Yeah.
anything else we can do to put those odds in our favor.
Remember those treasury spreads we talked about earlier?
Yes.
Keeping an eye on that spread between the 10-year treasury yield and mortgage rates can actually help you figure out when might be a good time to buy.
Okay.
If that spread is really big,
Yeah.
meaning mortgage rates are a lot higher than those treasury yields, it could mean that lenders are really worried about things.
Okay.
That might not be the best time to lock in a rate.
So ideally, we're looking for a smaller spread,
Right.
which means that lenders are feeling pretty confident
Right.
and they're giving more competitive rates.
Exactly. And don't forget about that spread between the 10-year and 2-year treasury yield.
Right.
If that one flips, remember we talked about inverting?
Yeah.
That could be a sign that the economy might be going down,
Uh-oh.
which might make you want to be a little bit more cautious about taking on a big loan, like a mortgage.
It's like we have this whole secret language now
Yeah.
to help us understand what's going on.
Right.
Okay.
And one final piece of advice.
Okay.
Be ready to move quickly when you see a rate that you like.
Okay.
Mortgage rates can change really fast.
Right.
So once you've done your research and you found a lender you like,
Uh-huh.
don't wait.
Okay.
Lock in that rate, because if you wait even just a day or two, you might miss out.
So we have to find that balance between being strategic,
Right.
but also being ready to jump on a good deal.
Exactly. And this is where having a good realtor and loan officer can be really helpful.
Right.
They can help you figure all of this out and make sure you get the best deal possible.
This has been really helpful. I feel like I can actually wrap my head around all of this now.
Good.
But what about people who already have a mortgage?
Yeah.
Is there anything they can do to try and lower their rate?
Yes, refinancing can be an option,
Okay.
but it's not always the right move.
Uh,
You have to think carefully about the costs and benefits. If rates have gone down a lot since you got your mortgage,
yeah.
then refinancing might save you money.
So it sounds like refinancing can be pretty complicated too.
It can be. There are fees and closing costs involved, so
Yeah.
you have to crunch the numbers and make sure it's actually going to save you money.
Okay.
Another thing to think about is how long you have left on your loan.
Okay.
You could lower your monthly payments by spreading it out over a longer period of time,
Right.
but you might end up paying more interest overall.
So again, there are trade-offs.
Right.
And we have to understand what those are.
Exactly. And speaking of understanding, there's another tool that can be really helpful
Oh.
when you are thinking about refinancing or even just trying to figure out which mortgage is best for you.
Okay.
Have you ever used a mortgage calculator?
I've seen those online, but I have to admit I get a little intimidated by them.
Yeah.
They just seem kind of complicated.
They are not as scary as they look.
Okay.
And they can really help you get a clear picture of different scenarios, so you can make better decisions.
Okay.
There are a few different types of mortgage calculators out there. Each one is designed for a different purpose.
Okay, so break it down for me.
Okay.
What kind of calculators are out there?
One of the most basic but really important ones is a mortgage payment calculator.
Okay.
You put in the loan amount,
Uh-huh.
the interest rate, and how long the loan is for.
Okay.
And it will tell you how much your monthly payments will be.
Okay.
It can really help you see how even small changes in that interest rate can change how much you have to pay each month.
Oh, so I can just play around with those numbers
Yeah,
and see how that affects my monthly payment.
exactly.
That's pretty cool.
And if you're thinking about refinancing,
Yeah.
there are calculators specifically for that
Okay.
to help you figure out if it's worth it.
Okay.
They take into account things like closing costs,
Huh.
your current rate, and how much money you could save with a lower rate.
So it's like having a little expert right in your pocket
Mhm.
to help me figure out if refinancing is a good idea.
Exactly.
Okay, cool.
And then there are these mortgage affordability calculators,
Okay.
which can be really helpful if you're just starting to think about buying a house.
Okay.
You put in your income, your expenses, how much you have for down payment, and it gives you an estimate of how much you can actually afford to borrow.
So it takes away some of that guesswork
Right.
and helps you be realistic.
Exactly.
Good.
And the best part is you can find all these calculators online for free. Websites like Bankrate, NerdWallet, and Zillow all have really great mortgage calculators.
Okay, so we've got those websites to check out.
Yeah.
We've got those calculators.
Yeah.
And you were talking earlier about having a team of experts.
Yes, your mortgage support squad.
Yeah.
I can't stress enough how important it is to have these people helping you,
Right.
especially if you're feeling overwhelmed or unsure.
Okay, so who should be on this dream team?
Well, first, You definitely need a good realtor who knows what's happening in your area.
Okay.
They can help you find the right place at the right price
Uh-huh.
and guide you through all of those negotiations.
Right.
And then you're going to need a loan officer or a mortgage broker
Okay.
who can walk you through the process of getting a mortgage,
Okay.
help you find the best rates,
Uh-huh.
and help you get the right loan for your situation.
It's like they can translate all that financial stuff
Right,
into
yes.
something I can understand.
Exactly.
Yeah.
And depending on your situation, it might even be helpful to talk to a financial advisor.
Okay.
They can help you look at your big financial goals, figure out how a mortgage fits into those goals,
Uh-huh.
and just make sure that you're making smart decisions for the long term.
This is really great advice.
Yeah.
I feel like a lot of the stress just went away knowing that I don't have to do all of this on my own.
Right, buying a house
Yeah.
or refinancing. It's a big decision, it's a big financial decision, and it's a big emotional decision.
Right.
Having a team of experts you can rely on can really make it a lot easier.
Well said. Okay, so we have our websites, we have our calculators, and we have our dream team.
Right.
Is there anything else we could possibly need?
I think we've pretty much covered everything.
Okay.
Remember, knowledge is power.
Yeah.
If you learn as much as you can and have the right people supporting you, you can do this.
I'm feeling a lot more confident already, but before we finish this part of the deep dive,
Yeah.
I was wondering if there are any specific resources out there for first-time home buyers.
Yeah.
Because the whole process can be especially scary for people who have never done this before.
That's a great point. And yes, there are a lot of resources out there specifically for first-time home buyers.
Okay.
A lot of government agencies and nonprofits offer free classes, online courses, and even one-on-one counseling to help first-time buyers figure out how everything works.
That's awesome. So where can people find these resources?
The Department of Housing and Urban Development, or HUD, as most people call it, is a great place to start.
Okay.
They have a website that's specifically for first-time homebuyers,
Okay.
with tons of information and links to help you find local resources.
Okay, so HUD, check.
Okay.
Any other organizations we should know about?
The National Association of Realtors
Okay.
also has a lot of great stuff for first-time buyers.
Okay.
Like articles, tips, and even a list of real estate agents who specialize in working with first-time buyers.
So no matter what, there's help out there.
Right.
You don't have to do this alone.
Exactly. And speaking of not doing it alone,
Yeah.
let's move on to the last part of our deep dive.
Okay.
We'll be sharing some extra insights and real-life stories
Okay.
that can help you on your mortgage journey.
Sounds good. I'm ready for more.
Yeah.
All right, welcome back to the last part of our mortgage rate deep dive. It's been a journey, hasn't it?
It really has.
We started off feeling like mortgage rates were this big mystery, but now we understand how they work
Yeah,
and who the key players are.
exactly.
And we even have some strategies to use.
We've really taken a look behind the scenes
Right.
at the whole process, from the Fed and the bond market to inflation and treasury spreads. We've gone through all the things that affect those mortgage rates.
And we've talked about how you can actually use what we've learned
Right.
to your advantage and become a smarter borrower.
Exactly. We've covered everything from shopping around for rates to understanding your credit score to negotiating with lenders and even thinking about the best time to buy or refinance.
But it can still feel a little overwhelming at times, can it?
Absolutely.
Like, where do you even start to put all of this information into practice?
That's a great question. It's one thing to understand how things work,
Right.
but it's another to actually do it.
Yeah.
So for this last part of our deep dive, I wanted to talk about the human side of mortgages.
Okay, what do you mean by the human side?
Well, we've talked a lot about the numbers and the data and the economics of it all.
Right.
But getting a mortgage is really a personal thing. It's about your dreams, your hopes for the future, your financial well-being.
Yeah, it's about finding that place that you can actually call home.
Right.
A place to build a life, have a family,
Exactly.
or just enjoy your own space.
And because it is so personal,
Yeah.
it's really important to approach it with the right mindset.
Okay.
One of the biggest mistakes I see people making is letting fear or anxiety take over.
Oh, I know. The thought of taking on that much debt is scary.
Absolutely. And that fear can make people freeze up.
Yeah.
They might not buy a house at all because they're scared of making the wrong choice.
Right.
Or they rush into it without really understanding what they're agreeing to.
So how do we deal with that fear?
Yeah.
How do we approach this process feeling confident instead of feeling completely overwhelmed?
I think the first thing is to just admit that you're feeling those things.
Hmm.
It's okay to be scared or unsure. This is a big decision.
It's normal to have those feelings.
So just admit that it's scary, but don't let that stop you.
Right. And then I think it's about focusing on the things that you can control.
Okay.
You can control how much research you do,
Uh-huh.
how many questions you ask, how carefully you compare all your options.
It's about being proactive and taking charge
Exactly.
instead of feeling like you're at the mercy of the market or the lenders.
Right. And remember, you don't have to go through this alone.
Right.
We talked about building a team of professionals.
Yeah.
That's really important. But also think about your own personal support network.
You mean friends and family?
Yeah. Friends, family, mentors, anyone who can give you advice or encouragement or just listen to you.
Yeah, those people are so important.
Exactly. Don't be afraid to talk to them and tell them what you're worried about, what questions you have, what successes you're having.
Sometimes just talking to someone you trust can help.
Absolutely. And sometimes hearing other people's stories can help too.
It can make you feel better knowing that you're not the only one who has felt lost or confused. I wanted to share a story with you that really shows how important knowledge, preparation, and perseverance are when it comes to getting a mortgage.
Okay, I'm ready to hear it.
So a few years ago, I worked with this young couple. Let's call them Sarah and Mike.
Right.
They were first-time home buyers, and they were super excited to buy their first home,
Right.
but they were also really nervous.
I can imagine.
It's a big step.
It is, especially when you're doing it for the first time.
It is, and Sarah and Mike had heard all these scary stories
Yeah.
about how complicated and stressful getting a mortgage can be.
Right. Those stories can make you feel like it's impossible.
Exactly. But Sarah and Mike were determined to do things the right way.
Yep.
They spent months researching, comparing different lenders, and getting all their finances in order.
They were doing their homework.
They were, and when it was time to apply for the mortgage, they were ready.
Okay.
They had all the paperwork. They understood what the loan meant, and they weren't afraid to ask a lot of questions.
That's so important. Being prepared really does make a difference.
It really does, and for Sarah and Mike, it worked. They were able to get a mortgage with a really good interest rate
That's
and terms that they could afford.
So all their hard work and preparation paid off.
It did, but it wasn't always easy.
Oh, I bet.
They had a few problems along the way. There were delays and unexpected fees,
Yeah.
and there were times when they wanted to just give up.
Yeah. Things don't always go perfectly, do they?
They don't, and that's where being persistent really matters.
Okay.
Sarah and Mike didn't let those setbacks stop them. They stayed focused on their goal.
Right.
They talked to their lender and realtor, and they worked through all the problems.
And in the end, they were able to buy a house.
They were.
That's a great story.
I think their story shows us that getting a mortgage can be tough.
Yeah.
But if you have the right knowledge, you prepare, and you're persistent, you can do it.
That's really inspiring to hear about people who are able to get through those tough times and reach their goals.
Right.
And it shows you that there's more to this than just the money part.
Yeah.
There are real people going through this.
Exactly. And I think it's important to remember that we've been talking about the money part,
Right.
but there's a big emotional part to this, too.
Yeah,
Buying a house is a huge life decision.
it is.
So it's okay to feel a lot of different emotions about it.
It's about finding that place
Right.
where you can really settle down and make it your own.
And that's something worth working towards, even if it's not always easy.
So as we wrap up our deep dive into mortgage rates,
Yeah.
I think the biggest thing we've learned is that knowledge is power.
Yes.
Being prepared is key.
Right.
And you have to keep going even when things get tough.
And don't forget how important it is to have people you trust on your side.
Right.
Having a good support system can make a big difference.
Absolutely. To everyone listening out there, whether you're just starting to think about buying a house or you've already been through it,
Yeah.
we hope this deep dive has given you the information and the tools you need to navigate this world.
Remember, you can do this.
Yeah?
And if you ever have any questions
Yeah.
or just need someone to talk to about all of this, don't hesitate to reach out.
We're always here to help you understand the world of finance and make smart choices. Thanks for joining us on this deep dive.